Alright, good morning, TC Nation. This is Mark Wine Trader. I forgot the market was closed today. I got so excited about yesterday that I forgot the market was closed today. But I kind of wanted to give you a screenshot of what's going on, what I think is going to happen, or what I want to happen. I don't know what's going to happen. Nobody knows. If anybody tells you that they know what's going to happen, they're full of shit. Alright, let's get to work. So here's yesterday. As you can see, the market spiked up, and I was watching to see if the high during the day could break above the high of previous days after hours, and it couldn't. See that right there? Right, so as it started to turn down, that was a good sign. And then I want to see if it would go below the low of pre-market, and it did. Right, and then what I was doing was I was watching to see if towards the end of the day if they were going to goose it towards the end, and I thought it did. I thought they were going to do it, and they gave it up right towards the end. Right, they ended up here, and then after hours it even went lower. So as you can see, after closing or after hours yesterday, it's the lowest it's been in 5 days. Let me zoom out real quick and show you what I mean. So this is my 15-minute chart over 5 days. So as you can see, the high was 236.26. This is in the SPY, and the low was, just last night, 232.29. So again, the last these 2 days, you can see it was just what we call kind of like inside days, meaning they just kind of stayed within the previous day's high and low. Here's the high, here's the low, and it stayed in between. It broke above overnight, and you can see kind of what I'm looking at now. As I always say, repetition is the mother of all learning. So here's the low of the day, right? And I'll try zooming. I'll go day to day here. So I was just looking. I wanted to see it break down. Here's the low overnight, and it tested the low, and it didn't go lower. That was a bad sign for me. The only thing that made me feel better that day was the high was lower than earlier in the day. This is a 15-minute chart. And of course, at the end of the day, it gave it up. After hours, I wanted to see it either go below this or above this to see what was going to happen. Tested it, didn't quite go. Tested it again, kind of didn't really go. And on the opening, bam, it dropped down. Good sign. Now, whenever this happens, you're going to see a rally back. My main thing is I don't want it to rally back above this or above the previous high, like right here, and it didn't. Okay, so I was hoping for it to give it again. So again, same thing. And if you look over a 5 trading days, you'll see what I'm looking for is lower highs and lower lows. Since I wanted to break down, right? So lower highs and lower lows. Okay, so this one kind of scared me. Not scared me, but disappointed me is the right word, right? And then now it's starting again. But see, this low right here is higher than this low, so but then it's starting to go again, go again, and this high is not higher than this high. That's good, and then it went lower. See, that's what I'm hoping. Now, how this translates into the daily chart is right here. All right, let me go to just 6 months right here, okay? 6-month daily chart, as you can see right here. So that's what's happening here. Each one of these is a day now, right? This is a daily chart. So same thing as it expands to the daily chart. I want to see lower highs. See, this was the high, and this was another high, but it's lower. See, these highs are lower. So steps, right? Step down, and I want to see another step down. And I want to see these lows be lower. Lower here. See, I didn't like that, but lower here. And see, I want this to become, I want to see if it can go below here. So I'll zoom in. See, it went as low as this, but it closed over here. So I am watching this low tick right here, but I'm really watching around 232.63 roughly. The low was 231.61 and closed at 232.77. So I really want to see it break that and go lower. The reason why I want this to happen is I want IV rank to climb. And look at IV rank, it's 36% basically, right? By the way, here's your IV rank chart in my charts. And if you want my charts again, just let me know. Toward the end of this video, just like this video, subscribe, hit me up in the comments or message me, and I'll send you all my charts. All right. So this is the daily chart. All right. This is IV rank, and that's what I'm looking to see happen, because as IV rank increases, you can sell your golden geckos for more money. And a clean disclaimer: I don't personally do strictly golden geckos. what I do is a little bit more advanced. For more information on that, you can inquire at the end of the video up here for private coaching. My charts show this. So see how it's yellow? Because yellow is kind of good. It's letting you know it's getting good. It's getting as high as it, the higher it gets towards 50% right here in IV rank, the closer this will turn green. See, it's orange right here, IV rank. So you can tell IV rank just by looking at these little indicators I have here. This is if there's a price change, what the price change is in the last 5 trading days. So it's down 1.6%. Now I'm going to switch over real quick to the whole thingamajig. Here we go. All right now. Okay, perfect. So here's the last 6 months again. Now, why am I bearish? Because look, here my OBV, which indicates to me that there are more sellers than buyers. And this is red, and it went red here at the same time, and that's when the downward trend should have started, and sure enough it did. It could go lower. I mean, it could stay well below this green line for a bit. See, it could spike all the way down as low as here, and that's what I'm looking. You know, this, and I wanted to basically come back, test this 222.36. Why? Because then you'll see IV rank pop like I did back in October. See? Let me extend this out to a year, and then I will, you know what, let me go to 10 years real quick, and then I'll just zoom in for you. Okay, so I'll just zoom in like, whoops, auto arrange. Okay, I'll just zoom in like this, and I'll slide back. All right, so back in October, see, October, November, we had this nice spike right here. Okay, it was up really high, look. This is back in, of course, what, 16, yeah, last year. And it was just skyrocketed. Let me zoom in real quick, like right here. And then I'll just drag my slider this way. So you can see right here, beginning of January 16, nice volatility. But see this sharp down move right here? I mean, IB rank only got to 50. It didn't spike as high as 100 like it did down here. So that happens when there's a large drop in one day. This is almost kind of like an orderly drop, but it's a nice drop. Okay, but and then as you can see, IB rank kind of steadily climbed higher. I kind of like what I'm seeing here actually. Oh, whoops, my bad. Kind of like what I'm seeing now. Okay, nice climb, 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 and if something happens, you know, if market gets scared, this will drop more. But keep an eye on how low this can go. This can go way below that 25 green line right here. See, and that could indicates, you know, so we got a chance for it to go lower. Now, why again this is important? Oh, I'm sorry, real quick. This is IWM real quick. I'll go through the quick index with you as I always do. Okay, so this is a 10-year chart actually, but you can see the volatility in IWM is a lot more, which is why, and it's a cheaper index, which is why for my new members, I kind of recommend you start there. Okay, but it is more volatile, so stay small. And I'll zoom in for the last year or so. Here we go. Okay, IV rank, look at that, 45. IV rank is almost at 50. Once IV rank is, I'll give you a good example. Once IV rank hits 50, let's count how many days before it gets down below 20 again. All right, so let's pick this time right here. So I'm going to zoom in right here, and as you can see, it hit 50, right? This green line is 50, which is, let's say, I don't know, right around here. It took how many days for it to get back? Here we go. 1, 2, 3, 4, 5, 6, 7. 7 days, and it got back down to 25. Wow, that's it. 7 trading days. Let's go look at another time frame. How about right here? Oh no, I didn't get to 50. Sorry. Let's look for another time. Went to 50. Where did it last touch green? That was last time was here. Last time was here. Okay, let's zoom in right here. Okay, hit 50. You can see that line right there. So 1, 2, 3, 4 days, and it got back down to 25. So that's why your probability of making 50% of your bank profit goes greatly a lot higher once IB rank goes up like this. And the good news is, hold on, let me check my 15-minute chart. Here's after hours, kind of flat, but as you can see from what I taught you guys in the last videos, same thing, right? Now let's go to what I want to happen. Here's SPY. So let me clear this again. Why I called it a golden gecko? Because from now on, whenever you hear or wherever you hear me talk golden gecko, you know exactly what I'm talking about. You don't have to ask me what strikes, what expiration. You'll know what it is. Here's a golden gecko. You go to strategies and Tastyworks. Okay. Go to Iron Condor. You're clicking normal. You want to make sure a normal Iron Condor has a star next to it. You want this to say 45 days. You want the monthly check. You want the weekly unchecked. You hit one standard deviation. You want this to say 10. This will automatically take you to a golden gecko. What is a golden gecko? It's not just any iron condor, because like I said, anything can be an iron condor. A golden gecko is a specific one. You're selling the one standard deviation put out of the money, which is this dashed line here. You're also selling the one standard deviation out of the money call, which is this dotted line right here. You're also buying the two standard deviation call, which is this line right about here. You'll see it, right? Okay. Two standard deviation lines close to that. Okay. And sometimes I don't even look at the strike exactly what it is, because all I'm looking at is this and the percentages. How do I know what the percentage is? Click the tile button right here, and you want the ones you're selling, because these are the ones you're selling, to say close to 84%, and the ones you're buying to say close to 2%. And that's a golden gecko. And you will see this is how much, here's the probability of you making at least a penny. As long as the SPY stays within this green shaded area, meaning you're betting it won't go below 221, and you're also betting it won't go above $244 per share. So that anywhere in this line, but at the end of 35 days, you'll make money. Anything outside of that is red. That means you lose money. Okay? So the reason why this is good is because as IV rank, here's your IV rank, 35 in SPY. As this number gets bigger, this is the amount you can sell it for. As this number gets bigger, that same one standard deviation, you can sell these for more money. And the chances of you collecting 50% of your max profit, meaning this is your max profit, $85 for this particular trade. If you click on this in Tastyworks, it'll tell you I have a 94% chance of making 50% of my max profit. That's what I mean by I trade the arithmetic. All right. I like what the arithmetic is showing me here. Right. Not once have you heard me talk about delta or anything or whatever. All you need to know is the math, and the math is saying these are your probabilities. Now be careful. Even people on my own forum here, okay, even on my own forum here, you got people talking about different ways to trade and whatnot. That's great. That's why I started this. Okay, you'll see my blog updates here. Of course, we're on YouTube, but just be careful what you're watching. Other people make claims on. All right, so because I want to make sure that this is basic, and you can't go wrong with basic. I'll go in a next study. I think I'll go over some proof is in the pudding type stuff, like this study right here. Here's the S&P 500. Here's a combined basic strategy that I've gone over on my websites already. I mean, on my YouTube channels before. All right, it doubled the S&P 500. In fact, if you wanted to get the same return as the S&P 500 going back to 2005, you would have had to have only 1/3 the risk, meaning 25. You could have done it with, yeah, basically 1/3 the money. So, and still yield the same equal percentage growth as the SPY. All right, so and this is how you want to manage. This is a standard golden gecko, so you guys know what that is. Now let's look at IWM real quick. Sorry, I'm trying to get through this real quick. I know it's Good Friday. Here we go. So IWM, same thing. That's what I love about Tastyworks. Look at this. Boom. Look at IWM is at 41%. Let me bring it in. So look, you can sell it for $84, but it's a lot less risk because it's a lower index. You see what I'm getting at? Watch, I'll put in SPY again. And this is the last trade I had on. 86 cents. Same, right? Now look at the amount you're risking, the amount of capital you're tying up. $1,214 on SPY. Let's take a look at IWM. Okay, here's the same trade, right? And roughly, look, only $916. Okay, so if you like what you see, please hit, at the end of this video, hit subscribe. If you have questions or comments, leave them over there, and I'll be happy to go into it. I'm going to start doing a little series. I'm still trying to put it together, and again, I'm just going to do it just for beginners. For you advanced guys, you should know what to do. Private clients, you also know what to do. Follow. Don't forget to check your Hangouts for my alerts. All right, have a great day. Bye.